Hello, everyone. This is Alexander Horat with the Free American Press. Today, we're going to be having the president of Miles Franklin on the show, Andy Schectman. But before we get into it, if you can please subscribe to my channel and leave a like on the video, that'll be really appreciated. Hello, Andy. Thank you for being on the show.
Good to see you, Alex. Good to be back here again, buddy. I look forward to our weekly discussions. So it's good to be here.
Yeah, well, thank you. And that sounds great. So a lot of the viewers are wondering what your forecast on gold and silver is in the coming weeks. Could you tell them what your thoughts are?
Well, I think that the price of gold and silver ought to go much, much higher in the coming weeks, Alex. And I think though that doesn't come without a great deal of volatility mixed into it as well. We have the Basel III reserve requirements going into effect here for the banks in Europe on the 28th. And although a lot of people are expecting that to be a big event, I think it's just the beginning of a big event. It's lighting a fuse, if you will, being that the London Metals Exchange is located in the UK, and the UK banks are still able to trade unallocated gold outside of the Basel III agreement until January 1st, as are the banks in the US. So while I expect greater price discovery towards the end of the year, while I expect the Basel III agreement to have a significant effect on that, not just yet. So I think you'll see volatility. I think you'll see prices go much higher. But I also think that there'll be opportunities to get in at really attractive prices, as I think you'll see pullbacks along the way. I think you'll see repositioning by these big banks as they try to get in line with the Basel III reserve requirements that go into effect globally, not just in Europe and Switzerland here at the end of the year.
Okay, so could you tell us a little bit about these requirements and how you think they will push the gold and silver price up?
Yeah, well, the reserve requirements center around the unallocated accounts at the London Metals Exchange. The London Metals Exchange, by its very nature, is a synthetic, unallocated, 100-to-1 leveraged, unallocated account. So, in other words, for everyone who owns, if 100 people own a contract, only one of them could get delivery if everyone stood for delivery. In other words, is the term rehypothecation, where each contract is rehypothecated a minimum of 100 times. It is this leverage that gives the commercial banks, the big bullion banks that push the price around, the ability to push the price around with impunity, in the respect that they have the biggest chip stack and they can take these huge unallocated positions and take a position against it. Well, before the Basel III reserve requirement, those positions would count 100% on their balance sheet. Two things are happening. Number one, it'll count as an 85% position on their balance sheet. Immediately, they take a 15% haircut. But as it pertains to collateral against liabilities on their balance sheet, it will be zero. So they take these huge positions, and it will not be counted as an asset against liabilities as it once was. It opens them up to tremendous risk and speculation if the markets move against them. One of the things that has given the banks the ability to manipulate the price is to trade in these unallocated synthetic accounts. As an example, last Thursday, when the price got smashed, 1 billion ounces of paper silver were dumped onto the market like that, which drove the price down. That's all paper silver. That's a year, almost 2 years worth of global mine supply, or a year and a half rather, of global mine supply. And so, you're talking about banks that are able to control the price with these unallocated accounts that will not have the incentive to do it any longer because the risk will be just too great. The Bank of International Settlements, I believe, realized that this was a problem, implemented these rules quite some time ago, and they're now just going into effect here in the UK on the 28th, or excuse me, in Europe on the 28th, which includes the European banks and the Swiss banks, and then in the UK and the United States, January 1st. So, like I said, I think this was a fuse being lit, if you will. And if you listen really closely, you can hear that because you're going to start to see a progression of events. These banks will, I think, with a good deal of volatility, by shorting the price, they'll do so to get their unallocated positions in line with these reserve requirements. Right now, they have the ability to push the price around and have for quite some time with these positions, but they will dramatically lose the incentive to do so when these positions are counted zero against liabilities on their balance sheet. It's a big deal, Alex.
Yeah, it definitely sounds like that. And one thing I wanted to get into and ask you a little bit about was this article right here. So I'm going to share my screen with you. So basically, what it's saying is that in Venezuela, a single ounce of gold can buy a house, and an ounce of silver can actually, pay to buy food for 6 months in Venezuela. So I found this pretty interesting, because if we're going to see, inflation or hyperinflation going on in the United States, it would probably be very similar to what happened in Venezuela. What are your thoughts on this article and what happened over there?
Yeah, well, God forbid we see that type of hyperinflation. John Williams' Shadow Stats tells us hyperinflation is around the corner, that right now we're actually at 12% inflation, not the 5% transitory that the government tells us, but even a 5% rate of inflation against 160 basis point 10-year treasury means that any fixed income, you're guaranteed to lose 3.4% or 340 basis points year over year compounding. John Williams tells us that those numbers are actually 2 or 3 times that. So look, bottom line is that whether we see hyperinflation like John Williams thinks, or a massive deflation, depression, as the global forces of deflation bear down on the world, it's irrelevant. Gold will perform very, very well, and silver, in an inflation or in a hyperinflation, as that article is showing you. And as history has shown, that in a depression or a massive deflation, gold and silver are the only assets that are not simultaneously someone else's liability, no counterparty risk. It will perform better than anything in a massive deflation or depression. So whether you see hyperinflation or you see depression, it doesn't matter. Gold and silver need to be part of your portfolio. Do I think we'll see times that bad? I'd like to hope not. But if all of a sudden the Chinese issued a gold pegging to the new digital yuan and freely traded it, yeah, you could see a dumping of dollars that overnight would make people's heads spin, and a whirlwind of inflationary forces bearing down on the U.S. homeland. Then could we see that? Maybe. Let's hope not. But whether we see inflation or deflation, everyone should own some gold and silver. And these are the times to do it when you're faced with currency problems like we're having, and a country that has eviscerated the value of their dollar at the lowest interest rates in human history. Just wait till interest rates rise. Or does the Fed have the ability to even stop printing money hand over fist? This is a question that remains to be seen. But I would simply say, Alex, that these types of discussions actually have merit. And so people should be putting away, and like I talk about with you, every 2 weeks, put something away, pay yourself first, put a couple coins in your pocket, because one day you'll wake up and you'll be 50 years old like I am, and you're not going to be 17 forever. May seem like it, because life is like a roll of toilet paper, and as you get older, you start to witness the roll spinning a little faster. When you're young like you, it goes slow and time goes on forever, but I promise you, will wake up one day and realize just what I'm talking about. So along the way, as we get to whatever the future holds for us, inflation or deflation, depression or stagflation or hyperstagflation, whatever it is, having some precious metals in your portfolio is really a smart thing to do, not to get wealthy, but to protect against all of these potential outcomes.
Yeah, I definitely agree. And actually, I want to show you this article too, really quick, that I found pretty interesting. So it talks a little bit about, Venezuela and what's happening over there with the price of gold. But then I found it pretty interesting, because they always talk about, gold is really important in a disaster, in a crisis. So I found this article pretty interesting, because it talks about what happened in Vietnam, for instance, and how people were actually able to leave there because of the gold. So it was saying how it actually, in an extreme case like this, gold helps save those people's lives. So do you think in a disaster, kind of like what happened here, or just in general, do you think gold will perform well, or do you think it won't perform well? What are your thoughts on that?
Look, gold has outlived every world war, German hyperinflation, the Great Depression, every pandemic, and it's maintained supreme purchasing power. I think that in an event like that, currency becomes a hot potato. So yeah, let's hope that we don't see times like that. But if you don't have something that can protect you in those events, times like that, you'll be glad that you took advice and put some away. Just ask the people in Greece when they had a currency crisis, and just ask people in Argentina or Venezuela or Zimbabwe or Weimar Republic. I mean, history is littered with examples of currency devaluations and just how important it is to have some precious metals beforehand. Again, we're not doing it to get wealthy. We're doing it to retain what we've worked so hard our whole lives, whether you're 17 years old and just beginning, or 70 years old and have your whole life behind you. You want to have some metal put away for your future and that of your families.
Yeah, I think you're right, because basically it seems like inflation is just, another form of taxing, because that's what happened in Venezuela. They just inflated the currency away, and just a small amount of people got really wealthy. So I think you're definitely right, because Americans haven't really seen, firsthand, the effects of hyperinflation in their own country. So I think, it'll be really good for people to prepare, in getting gold and silver, to prepare for an actual disaster like all these other countries have seen. So I definitely think that's you're correct in that assessment. So one thing I wanted to ask you, Andy, was did you have a gold and silver special this week?
Yes, we do. And for your listeners, we will offer the 2021 Silver Krugerrand from South Africa. Fantastic coin for $4.99 over the price of silver. And I think you'll see that is as good of a price as you'll find anywhere in the United States. All they need to do is either send me an email at Andy@MilesFranklin or info@MilesFranklin, and put in their Free American Press sent me or Alex sent me, and we'll make sure that your listeners, your viewers get the best price in the country, whether it be on the Krugerrands or anything else. They can also just request an inventory sheet, which we update every week. Be happy to send that out to them as well, Alex. And a portion of every sale that we do will go back to you to help you continue to do what you're doing. Get the word out. Tell the young people how important it is to buy precious metals. And I think I admire you very much, and applaud you for being able to see outside the box, see through the noise when other people normally don't have the ability to do that at your age. I think that will serve you very well. So keep it up. I'm honored to be helping and be part of what you're doing, and we'll look forward to seeing you next week. But yeah, 2021 Silver Krugerrands, $4.99. Send me an email, Andy@MilesFranklin, and I'll make it worth your while.
Well, that's really great, and thank you for everyone who is doing that. And please check out Miles Franklin. And yeah, Andy, it was really nice having you on the show. Is there anything you'd like to add with anything that we've talked about?
No, you know what? I think, Alex, the most important thing for all this is pay yourself first. Pay yourself first, and under any condition, even if it's only 1 ounce of silver that you're putting away, do it. I think you'll be glad you did. And that means you too, Alex. You every 2 weeks you start buying some gold and silver, and I promise you'll call me back someday and thank me. In the meantime, for your listeners out there or your viewers, send me an email, mention your name or the Free American Press in the subject line. We'll make sure you get the best price, and trust your gut. Get outside and enjoy the summer. You're going to wake up one day and see prices much higher. don't worry about the pullbacks in gold and silver. The biggest money in the world has been accumulating it voraciously recently and over the last year and a half. The price will take care of itself. But I'm just honored to be part of what you're doing and look forward to picking up with you where we left off next Friday.
Well, that sounds great, Andy, and I'd like to thank you for being on the show, and we'll look forward to talking to you next Friday. And just as an end note, everybody, just remember that they can't inflate gold and silver away like they can the US dollar or any paper dollar backed by nothing. So I'd like to thank all the viewers who watched this video, and God bless.